Hey, everybody. Welcome to this episode of Tech Guys Who Invest. We're so excited to have Ryan Murdock on this episode. Ryan, thanks for coming on the show.
Hey guys, thanks for having me, man. This is going to be a good time.
Well, Ryan, we're going to jump right in it, and we wanted to ask you why Open Door Capital focuses specifically on mobile home parks.
We could probably take up the entire show just with that answer, but I'll try to condense it as much as we can. We like mobile home parks, although there's many great asset classes we could have picked and gone with. We felt the real need to just pick one thing and be very good at it instead of getting distracted like I certainly tend to do. I know Brandon Turner tends to do, like we all tend to do, right? So
Right.
we picked mobile home parks really because we feel that they're as recession resistant an asset as you can get, and that was tested pretty quickly during this whole COVID thing, where we've had nearly 100% rent collections through all of COVID.
Wow.
Certainly remains to be seen what the next few months bring, but so far we've done really well with it. So with it being workforce housing and typically low income housing, there always seems to be a need for that during a good economy, bad economy, no matter what's going on. Like there's always a need for workforce housing. So we like that aspect of it. The other thing that we really like about it is the opportunity for value add. So unlike apartments or any other sort of, whether it be commercial or retail, to add value to a mobile home park, our target park typically is 60 to 70% occupied. So we buy them generally on current cash flow and current value. But we know that if we buy a 100-lot park that is has 70 lots that are occupied, we have another 30 lots that we can fill through either we'll have tenants who will bring their own homes in and set them up, or what's more likely and happens at a quicker scale is we'll buy homes, bring them in, set them up, and then sell them off to tenant buyers. So during that process, if we spend $15,000 or $20,000 to bring in a home and set it up, and we sell it even for a break even, like we're not looking to make any money on the sale of the home, or even if we take a small loss on the sale of the home, we've activated a lot that is bringing in $300 to $400 a month in lot rent that was not otherwise activated. So it's different from an apartment in a sense where if you're going to add value to an apartment, you have to go in and renovate. You have to spend money to renovate, and it's typically not a break-even process when it's all said and done. Yes, you'll be able to raise the rent and it adds value overall, and it's a good thing. But with mobile home parks, we can add value really for a net zero cost. If that makes sense.
Yeah.
Yeah, no, that's really neat. What are some misconceptions about mobile home parks?
They just tend to be the laughingstock, I think, of the industry, and myself included. I mean, I was as guilty as that. Like, just growing up, and I didn't live in a mobile home park, but I had friends that did, or we drive through. There's always cracking jokes about the trailer park, or
Yeah.
huge fan of Trailer Park Boys, that series. Like that's a riot, right? It's fun stuff, but it's very stereotypical. So what we found is that there's always an element of that, and I've managed apartments for years. I've managed everything, and there's always that kind of low end joking element anytime you've got tenants involved, period. But that what we found with mobile home parks is that's not the norm. I mean, we have a fantastic tenant base in our mobile home parks overall. We see a tremendous pride of ownership in the parks that we have, whereas the tenants own their home. So there's a real pride of ownership there that you don't see in apartments and you don't see in other asset classes where the tenants are doing their own repairs and maintenance. They own their home. They've lived there for years. They've got emotional attachment. They're working to beautify it either through renovating or landscaping, or they've really got that pride of ownership that I've never seen in any other asset class. So it's the reality is certainly different from the reputation most times, and there's still a little bit of it. You got to keep things interesting, and we got to keep the good stories rolling around the office. So yeah, there are some stereotypical things that happen, but I've seen that in every asset class.
Sure. Yeah, exactly. You see that everywhere. No, that's interesting about how the reality is a little different than the stigma. How would you, for people who don't know, that some people are probably curious just how you might describe a lot of the residents, or like what they're like in terms of just like, how, I don't know, I guess it's not what you'd think there,
No,
right? It sounds like they're just
no.
probably hardworking, regular people, right?
That's typically what it is. And just especially in the past 2.5 weeks, I had to do on-site due diligence at 3 parks that we have under contract. And anytime I do due diligence, I'm always touring area parks, because once we're in one location, we might as well try and buy other surrounding parks because we're already there. So I've toured, hundreds of parks in my lifetime, but 33 specifically in the past 2 weeks, driving through, doing videos, doing some pretty good research, and across the board, I mean, it is exactly what you said. It's typically the, the sort of blue collar, hardworking, they mean well. Usually it's they got a couple kids and both parents work. I mean, it's really that segment of the population. It's workforce housing. There's also a pretty good segment of retirees. So maybe older folks who have downsized, their kids are gone. They don't want to take care of the upkeep of a full-size house, and they're happy just living in a mobile home. It's a lot easier to maintain. In Florida, where we've got a park under contract, you have even some snowbirds. Maybe they spend their summers up north somewhere, and then they come down to Florida just for the winter. So there's a pretty good cross section of the population, but they're all good people.
That's good. That's great to know. Thank you for
Yeah.
sharing that and breaking
Certainly.
that misconception. You mentioned this a little bit earlier when you were talking about that mobile home parks, you can kind of value add with a net zero expense. What other ways does it set itself apart from other asset classes in real estate?
Well, we'll go back to the pride of ownership and the tenants owning the home. So our target for all of our parks, and it's rarely how we acquire them, but our target is to have 0 park owned homes. So the goal is to have all the tenants own their own homes, which means they're taking care of all of their own repairs, maintenance, anything that happens on, like, in the outside or the inside of the home itself, they're responsible for. So it's different in a sense from with an apartment. The owner is responsible for all the maintenance, all the interior things, like, if the toilet's leaking or something breaks. As a manager or property owner, we'd get the call and have to go in and fix it. With a mobile home park, you don't have any of those calls, so it's a lot less management intensive, and typically your operating costs are a lot lower, because once we get a park to where it's stabilized and all the homes are owned by the tenant, they're just renting the lots. All we're really responsible for, the infrastructure with the water lines, the sewer lines, the roads, any common area maintenance, mowing or snow removal. But as far as any of the nickel and dime stuff with the homes, we don't involve ourselves with any of that. So it's completely different than apartments.
Okay. And that last piece you mentioned kind of segues into the next question I want to ask you around due diligence. I mean, what kind of things do you look for when you're doing due diligence on a mobile home park?
Well, there's 2 elements of it. You've got we call it the offsite due diligence. So we're reviewing all the financials and we're doing a lease audit, and the same thing that you would with an apartment or any other investment property. You want to make sure that the numbers that we've underwritten the deal on and that we presume are correct are actually correct. So we're looking at all the utility bills, all the leases. We want to get a handle on what the impact is going to be on the property taxes, if they're going to increase, based on the sale of property, all of that stuff. So we do all that before we dive in and do what is then the on-site due diligence. So similar to anything else you buy, you want to make sure what you're buying is physically sound, or at least that there's no surprises. So with a mobile home park, there's usually very few things to actually look at in terms of structures. You might have a park office, or maybe there's a stick-built home or a garage that maybe the manager lives in, but 99% of it is all infrastructure related to the park itself. So we're doing sewer line inspections. So we have a plumber come in and send a camera down the sewer lines. We want to make sure that that's in good shape. We'll have an electrician check out all of the generally the utility lines and the utility poles contained within the park are the park's responsibility. So the utility provider is not servicing those. We want to get a handle on the condition and age of those things. And then the electrical service meters or the entrances that service every single lot, we want to make sure and confirm what kind of shape those are in, if they're good to go as is, or if they're all going to need to be upgraded. So it's all infrastructure related type of things for the most part.
Okay. Makes sense.
So I just realized we kind of can we take a step back, and you were talking about 0% or 0% park owned homes. Can you break down just a little bit more about the structure of owning, or the business of owning a mobile home park? Like, how does that work? I just realized we didn't kind of dive into that yet.
Yeah, I guess I don't quite understand your question. What do you?
So it's like there's a part of it where you're talking about, it sounds like the mobile home park can own the mobile home, but then there's also the part where the
tenants
owner would own the park, and I'm just trying to
Yep.
understand how the pieces work together.
Yeah, so it varies by market. Really, there are some areas, and it's mostly smaller operators in areas where maybe the lot rent is just too low to really be sustainable. So they like to own the homes and renting the homes themselves is a profit center for them. And again, you see it a lot with smaller operators, maybe like, mom and pop on site, that he's doing all the maintenance and that type of stuff. But the industry as a whole, for the larger operators, they really don't want to deal with any of the park owned homes. So we're just trying to get it to lot rent only. And the real driving force for that, outside of just the maintenance issues and the overall management, is the lending environment right now. Banks don't like to lend on mobile homes because they are not considered real estate. They're more like personal property, like a car or a boat or personal property. So when we're going after and valuing a mobile home park, at least from a lending perspective, the only income that they're really considering is the lot rent income. So we'll see some disparity in a park that has a high number of park-owned homes, which is generating the lot rent plus the rent money for the actual home themselves, and the seller will value the park based on all of that income. But when we look at it, knowing that the bank is going to just come in and chop off all of the income generated from the rental portion of just the homes, there can be a huge gap there. So the seller might think that, hey, I want to sell this for $3 million based on my numbers, and he's not wrong, because it's actual money, and it's real money. But for us as buyers, when we know the bank's going to look at it and they're going to remove all that rental income, now they're just going to value it based on the lot rent. The seller's $3 million ask, it may be where we're at, $1.8 million, because we're just looking at lot rent. So there's a few reasons we want to get out of that park-owned home business, and those are the two big ones.
That is interesting. I am curious how that works out in negotiations.
Yeah, a lot of times, so the seller's in a bind, and that's why you see in this industry there's a lot of seller financing. It's to bridge that gap. So you might have a lot of park-owned homes. There's real money coming in, and you can justify paying the price, but the bank won't lend on it. So the seller hopefully will either finance the entire park, or maybe they'll take a second mortgage just to kind of cover that gap. Or us as buyers, we have to come to the table with a lot more cash, because we're only borrowing, say, at a 50% LTV, which in most cases we can't justify. It doesn't check all our boxes, so we have to pass on those deals. And there's some great deals out there. We've just quote unquote deals that work, but they don't work for us, so we've had to pass on.
Okay, makes sense. So we've talked about the assets. I'd love to talk a little bit about ODC Fund and why a fund, and how did you get to that? Like, what made you think, hey, let's do the fund, and that would be a great way to do this? Can you just share a little bit of that?
Yeah, I think anybody that's done a syndication or a fund, it's a mechanism to scale, right? I mean, it's a way that any one person or any small group of people can partner with other people and scale. And that's the key to this entire business, right? I mean, anybody that really wants to scale, you've got to bring in partners, or at least that's my experience. I think there's 6 of us now in the general partnership, and all of us together are very successful in our own fields, in our own right, in our own investing. But together as a group, we have achieved goals and been able to acquire property at a rate that none of us would have been able to achieve independently. And our investors in our fund are a part of that. And these are typically people that they're all walks of life, but most of them, the typical investor profile, it's somebody who has generally a very good day job, or they're making very good money doing whatever it is that they do. Maybe they like it, maybe they hate it, but they're making good money, and it's a mechanism for them to do something with that money. So a lot of these guys maybe want to be in the real estate game. They're interested in investing, but they either don't want to, or they just simply don't have the time or the knowledge or the ambition to roll up their sleeves and dive into an investment. So this is a more passive way for them to be involved and to invest in real estate. And I would say that to anybody. I know when I was in the tech industry for 10 years and just was itching for a way to get out. Like, I really wanted to get out, and pretty much just burned the ships, quit, and got into real estate investing. But that's not the route everybody should take. If you have a job that you like and you're making great money, like, excel at that thing and make as much money as you can. And if you want to turn around and take your earnings from that and invest it in something else, whether it's anything, stocks or real estate or any other thing that you're into, like, focus on what you're good at, make your money there, and then turn around and invest with people that can handle what you can't. So it's just, they're just an integral part of the team. I mean, any team, you have to bring in people that offset the skills or the knowledge or whatever it is that you're lacking. So for Open Door Capital, we have the network, we have the know-how, we have the deals, and our partners for that are the people that don't have any of that, but they have money that they want to invest. So it's a great fit.
I
Oh
love
yeah,
that. You
tons
mentioned
of good
that
stuff in there.
that the idea that if you love your job, or if you're good at it, just continue to do that. To invest in real estate, you don't have to be an active investor. You can be
Yes,
a passive
Mhm.
investor and still reap the benefits of investing in an asset class like mobile home parks. That is a
absolutely.
fantastic advice for our listeners out there. So we want to touch on your investing journey. You mentioned in the past you've managed properties, and now you're doing mobile home parks. We'd love to hear a bit more about how you got how you started and kind of how you ended up managing a fund.
Sure thing. So I was in, like I had mentioned, I was in electronics manufacturing for about 10 years, and I lived all over the world, and lived in Singapore for a year, went to Hong Kong for a year. And if I was going to sign on for another year, I was going to have to go to Shanghai. I'd visited Shanghai. I didn't want to live there for a year. I was really just kind of getting burned out on that whole industry. So I said, hey, why not start investing in real estate? I didn't know anything about it, but just read some books and said, yeah, I can do this. And came back. I'm from Maine originally, moved back from Asia, moved to Maine, bought a duplex where I house hacked that. Really no idea what I was doing, but lived in one side, rented out the other. Inherited some bad tenants and had some troubles there, but learned a lot. And what I learned more than anything is, hey, this, receiving rent's pretty cool. There's a bunch of other headaches that go with it, but like, I think I can pull this off. So I slowly but surely built out my portfolio. Around the same time, I got my real estate broker's license, real estate agent license, and started a property management company, which I built to, I think I was managing roughly 200 or so units. Grew that to the point where I was able to, long story short, it was I'd done that for about 5 years and was just really getting burned out. Needed to make some changes. Needed to hire some people to help me or do something different. And I ended up going to work for a larger property management company in my same town that had all the stuff I was lacking. They had administrative help and they had payroll handyman. So I brought my book of business, went to work for them, to which they were thrilled to have me because I had at that point plenty of experience and was becoming pretty much self-funded as I brought a bunch of business with me. So together we managed, I think it was 1,500 or so units, and I did that for another 5 years. And part of working with them was I was managing a lot of mobile home parks. So I really cut my teeth on mobile home park management there and spent a lot of time down in the trenches of just, whatever nasty, disgusting on-site, turnaround projects and just dealing with, all kinds of stuff. So really got some experience there. And it was in 2018 when Brandon Turner from Bigger Pockets had kind of put out a shout out that he was looking for a mobile home park, and he had cited his criteria and what he was looking for. And I happened to find a park local to me that fit his criteria. Sent him the details on it, and he liked it. Came out, we did some due diligence, and a month later we closed. So that kind of started my relationship with Brandon. That park was almost sort of like a test bed. It was a smaller park, 50 lots, but same sort of idea where it came with quite a few vacant lots. We were able to do some infill, increase the value. Everything went really well, and it was later in 2018 that I actually moved out to Maui to come and help him with some Bigger Pocket stuff and really to kind of get Open Door Capital kicked off. So that's a very condensed version of 10 or 12 years, but yeah, it's been a crazy ride.
It's fantastic. It's inspiring as well. And to think you went from a duplex to pushing 1,000 pads. I don't know if that's where you are now, but I know you guys are headed that way.
Yeah, we've got, I think,
amazing.
600. So Open Door Capital in its current form is we're going on about a year and a half now. And like I said, all the general partners have a decade plus experience. We have several thousand apartment doors individually if you combine us all. But Open Door Capital in its current form has been going for about a year and a half. We've got 600 or so lots under ownership right now, and a bunch of stuff under contract. If we close on everything that we have under contract right now, and there's always a chance some of that could fall out, but if we close on everything within the next, say, 60 days, we'll be up around 1,500 lots.
Wow.
And it'll be pushing 40 million in acquisitions since the beginning. So
Impressive.
it's been a real ride for sure.
I have to ask you how you push through fear. I mean, that has to, probably the duplex you did was scarier than the 600 units you're doing now, right? But how did you push through that?
I mean, everything I think is always scary to some degree if you've never done it before, and
Mm.
it's just you're just putting one foot in front of the other, and I'm reminded of that every day. Like for example, yesterday was a great example where I had to fill out an insurance application, and I hate those things. There's nothing that makes me want to throw myself off a building than having to fill out an insurance application. They come in the email, I'm just like, oh my god, there's always a list of questions, and I dread them, and I get this just. It feels like I get punched in the stomach. I hate them. All right, I hate them. But I print the thing out, and you look at it, and it's just one question at a time. Just, all right, what's the question? Go find the info, put it down. What's the next question? Put it down. And like 6.5 minutes later, this is done, right? It's
Nice.
not a big deal. It's not a big deal. But when I look at it, as silly as it is, I look at that one application, I'm like, oh my goodness, I quit. But 6.5 minutes later, I'm out of the woods. So it's the same thing on any scale, where just break it down one step at a time, get through it. And once you're done, I mean, I don't know about anybody else, but anytime I've battled through anything like that I was afraid of, that I was overwhelmed with, that I just didn't think that, oh my God, this is the end of the world, I'm done. I've gotten through it every single time. And then the next time it has happened, it's way easier to deal with, right? So we just keep going.
That's fantastic.
On that, since we're talking about, that the personal growth aspect, you talk about focus earlier, and what's crazy is and awesome at the same time with real estate is how many different ways that you can make money. But the problem with that is it's so easy to succumb to the shiny object syndrome.
Yeah.
And you hear mobile home parks, you hear multifamily, you hear no investing. How do you recommend somebody kind of hone in on what they want to focus on?
Yeah, it can be really tough to start out. And like I had mentioned, I pretty much just quit my day job and said, I'm going to do this. I'm going to make real estate work. And to make that happen, I really had to hustle and diversify. And I think anybody else would have to do the same thing. So I had a small number of rental doors. I had my real estate license. I had my management company. So I was doing a bunch of different things, but they all kind of centered around the one goal, which was to build a rental portfolio. Okay. So it was somewhat of shiny object syndrome, but it was more out of necessity that I had to start all these different streams of income. So I think that's different for everybody. And you have to figure out, especially if you have a day job, like when is the right time to quit? Can you ease into it and build up? But the real thing is you got to find something that you like and that you're good at. So shiny object syndrome is not necessarily bad as long as you can manage all of the things that you're doing. As soon as you get to the point where you've just spread out too thin and you're starting to fail at everything because you just spread too thin, that's a problem. And that's what we've certainly tried to avoid at Open Door Capital, and that's why we're focused now solely on mobile home parks. We get deals all the time presented to us that are great for parking lots or strip malls or apartments or like great stuff, but we know that, okay, we don't even want to veer off track and start to get spread too thin. We're solely focused on mobile home parks and that's it. So I guess in short, it depends on your situation.
Makes sense. So Ryan, Kevin and I talk a lot about the importance of a strong network and how important your network is. And you mentioned earlier how you're part of Bigger Pockets and friends with a lot of those guys as well. And you and Brandon even got together and did this ODC fund. Can you talk to us about the importance of a strong network and kind of how you look at that?
Yeah, it's everything, man. It's absolutely everything. And that is the only thing that has gotten me to where I am today. Not because I'm smart or because I'm really good at any one thing, because I'm neither of those things. It's staying engaged. And I hammer this all the time when I'm talking to people, especially newbies, especially people who are just trying to break into the industry. Stay engaged. So you want to listen to podcasts, you want to engage on forums, so it's Bigger Pockets Forum or wherever else, real estate Facebook groups. Go to meetups. Meetups are huge. If you have a local meetup in your area, go to it. If you don't have a meetup, start one. I mean, you want to get in front of as many people that are doing what it is that you want to do as possible. You want people to know who you are. It's a great way to find partners. It's a great way to find deals. It's a great way to find mentors. You're not going to accomplish anything if you don't just get out of the house and go do stuff. And I'm as antisocial as it gets. Like I hate crowds. I don't like talking. I don't like any of that stuff. So to like get past that and go out and actively engage in the community for me was a real hurdle. But it's everything, because that's the only way that people know who you are. And I continue to do that to this day. That's why I like to do these podcasts. It's staying engaged. People know who I am. So when they come across a deal that doesn't work for them, they say, oh yeah, we know that Ryan or Open Door Capital, this is a deal for them, and they pass it off. And likewise, I've made a ton of connections that when we come across a deal, I might be able to hand it off to somebody else. And that goes for deals, that goes for attracting help, as far as partners or money lenders or employees. I mean, you live and die by your network. I know we certainly have.
I love
Yeah,
it.
couldn't agree more.
And you mentioned a couple of things there where you said, yeah, you are one of those antisocial people, but you're finding ways to network. And right now we're filming this interview end of July 2020. COVID's still happening. You can network virtually, right? Connecting on forums where you don't necessarily have to put on a happy face when you're messaging somebody or interacting on a forum. So that is a fantastic point. Engage virtually. Book a time and call somebody. Reach out to somebody on Instagram. Those are all things that you can do. So just to harp on that point, that's a fantastic way to get engaged and network as well.
Absolutely.
So when it came to bigger pockets, and you touched on this with Brandon earlier when you sent him a mobile home park, how else did you become involved with bigger pockets, and how has that journey been for you?
Yeah, I found Bigger Pockets back in, it was 2016, and I had been investing for 7 or 8 years at that point, 9 years, and I was doing pretty well. I had, I don't know, 25 or 30 doors of my own, and was a successful real estate agent, and my property management was going well. But when I stumbled across Bigger Pockets, it just opened up this whole new world. And I don't know if other people are guilty of the same thing, but I was just going through my day, but I had these blinders on that I knew my segment of the business, and I knew my world and what I was doing. I knew it very well inside and out. I could converse with any real estate investor in the area, and I was pretty well known in my small town as being one of the investors to talk with. But as soon as I tapped in this podcast and I heard all these other people with all these other stories of syndication and funds and doing subject to and all these off-market strategies to find stuff, I'm like, well, what have I stumbled into? And was just supercharged with new information. So it really just made me look at investing differently, and just the download of knowledge from all of these podcasts. I went through, I started right from the beginning and listened to every single one of them all the way through. And just based on the information I found there, I was able to increase my own portfolio from I think it was 28 units up to over 50 units in less than 2 years. So it took me 9 years to get 28 units, and I almost doubled that in 2 years afterwards, just from the knowledge I got from Bigger Pockets. So that really kind of supercharged me. I was the Bigger Pockets success story poster boy for a while, and it's great. I would the amount of knowledge that's out there for free now. Bigger Pockets especially, but I mean, there's a million podcasts. There's all kinds of free information. There's no excuse that anybody can't get started. I know when I started in 2007, there was some information online, but not nearly the content that's out there now. So there's so much information for free right now that there's no excuse for anybody just not to absorb that and go with it.
Yeah, that I can't stress enough how influential Bigger Pockets was on me getting started. When I first learned about real estate investing and hadn't bought my first property yet, I was a fiend for their shows and their website. And man, I listened to the first 200 episodes, just binge listened.
It's a fantastic resource. Yeah, I think my record, I think I listened to 15 in one day. That was my single day record. Yeah.
Was that on 1X? Did you do 2X?
No, man, I listened to them on regular speed because I didn't want to miss anything. So yeah. Nope. 1X.
Man,
that's
awesome.
from when you wake up to when you go to bed.
It was. Yeah, it really was.
That's awesome.
Yeah, and then you've been on there a few times, so that's cool too.
Yeah, I think that's what prompted me. I was going to be on for the first time, and I'm like, oh my goodness, I got to get them all under my belt and get up to speed. So I was on this week-long binge. I think I plowed through 50 of them in a week or something.
Nice. So, Ryan, what kind of advice would you have for someone who is interested in possibly investing in real estate, but they just haven't gotten started yet?
Find what it is that fits your life. I mean, everybody's goals are a little different. So I know my goals were I was going to make time. I wanted to do the hands-on stuff. So I took that path and did that route. If you're one of those people like we had talked about that has the day job, start looking at passive investment. So it really depends on what your situation is and what your goals are, but figure out what your goals are and then work backwards from there. And if it's, if you go on the passive investment route, then, whether it's with us or anybody, there's a million syndications, there's a million deals out there. You just want to make sure you vet whoever it is that's putting the deal together. I mean, you can And there are guys that pour over the numbers and they pour over the offering docs, and that's great. Do that. Make sure there's no surprises in there. But ultimately, it comes down to you've got to trust the people that you're investing with. You've got to trust the sponsor of the deal. I don't care how good it looks on paper. The deal is only as good as the person or the team that's putting it together. So make sure that you have a lot of trust. If you don't have a personal relationship with the sponsor already, get referrals, and as many as you can, and try to get them from not directly from the sponsor, because they might give you some. I mean, they're only going to give you good references, but go online again. Bigger Pockets is a great place. I've seen sponsors get praised on there, and we've seen guys get the crap kicked out of them. Sometimes justified, sometimes not. But really vet your sponsor if that's the route you're going to go. And make sure there's a level of trust with them.
Great advice.
Yeah, I love that, because you're giving them your hard-earned money if you want to be passive. So there's an active component in the front end work, because you want to protect yourself as best as possible. So that's a very good point.
Yeah, and I'll add one more thing. If you're going to go the hands-on route, or whatever route you're going to go, you're not going to encounter any problems that somebody hasn't already had and overcome. So if there's any way for you to partner with somebody, even if it's for little or no money, but just to kind of learn the ropes, or if you want to buy a fixer-upper 4-unit and you've never done it before, then maybe partner with a contractor or a carpenter or somebody. Again, there's got to be a level of trust there, but to kind of show you the ropes, or partner with an experienced investor, even if you're working for free on your first deal, just to learn. Because if you just go it alone and it's trial and error, you're going to make a ton of mistakes. It's going to cost you a ton of money. So try to align yourself with somebody that has already done what you're doing and learn from them. I mean, you wouldn't go and just open a restaurant if you had never worked in a restaurant or had no idea, right? But if you worked in a restaurant for 6 months or a year, you'd come out a lot more knowledgeable about restaurant operations. So I think the same it can be true for real estate investing. Don't just dive into it blind. Get some experience, partner with somebody, and try to save yourself from making a lot of mistakes.
Absolutely. Getting a mentor, building that network is crucial. And that is also action you can take towards achieving financial freedom and helping you towards your financial success. You've had a lot of experience in real estate investing. What would you say is your favorite thing about it?
Right now, it tends to change, but I really like and this sounds cliche, but the freedom that it gives me. I mean, at this point, I've got enough passive income from my own portfolio that's what allowed me to move to Maui, is I could be really anywhere. And if I decide I don't like Maui, and I certainly love it, I could do my job now from anywhere, whether it's still overseeing my own personal portfolio of properties. Those are all third-party managed, so I'm really hands-off there. Or even the work I do from Open Door Capital, it's all done just like we're talking now, pretty much with Zoom and remotely. So I can be anywhere. So it's really the time that it has allowed me to spend on things that I enjoy. And it used to be that, I was always wanted to, everybody wants to make $1 million. You want to make $1 billion. You want to be rich. And sure, I still love to make money, but really the real value for me is the time and the flexibility to do what I want when I want. Certainly I have responsibilities and obligations that I have to meet, but I have a lot of time freedom to go and travel and living here. I'm an avid scuba diver, so I can just go scuba diving in the afternoon. Like that for me is really the value that I get out of real estate. I can't imagine having to report to an office anymore, which I did for many, many years. I just, and that was one of the reasons I got away from that, is because I knew at, I think it was age 30 that I had started investing, that I just couldn't see myself in that role of punching a clock for another 30, 35, 40 years. It just wasn't going to happen. And now I have to do that.
Yeah, I think a lot of people feel that way, Ryan, and some of them listen to the show. What are your thoughts on the fastest way to get out of the rat race if you're stuck there now?
Fastest way to get out of the rat race. It just really depends on again what your goals are and how much capital you have. If you have a ton of cash just sitting there doing nothing, probably your quickest way is to invest it in some sort of fund or syndication where you're getting a decent return and do that. If you don't have a lot of money but you have a lot of time, start out small. Buy a project that is something that you can fix up, a foreclosure or some sort of banged up multi-unit property, buy it, fix it up, refinance it, pull some cash out. That's what I did over and over again. Just every time, just did the BRRRR strategy. You know, you're buying it, renovate it, rent it, refinance, repeat, and just keep snowballing your all the cash you pull into your next property. And that's a great way to scale. But it just depends. Not everybody's cut out to do hands-on renovation. It's not easy. So you've got to find something that matches your skill set. So it just depends on if you're active or if you want to take a passive route.
Yeah, makes sense. And what you said there resonates with me. And I've noticed that just getting started with whatever it is, no matter how small, gets that snowball rolling, and it grows, you know, fairly quickly over time. I mean, it's certainly not a get rich quick game at all by any stretch, but you
No.
do notice it growing. You notice your efforts compounding on each other, and you'll get there one day. So
yeah, and that's why you kind of threw me on that question is how do you do it quickly? I don't know of any way to do it quickly.
Yeah.
I really don't. Like there
I
is no
don't
quick
either.
answer. Yeah, it's all slow. It's all slow, but it's steady. And if you're wise and make decent decisions, you're gonna gain.
It'll happen.
Gonna gain ground. Yeah.
Nice.
I love that. I mean, you said it took you 10 years to get to where you are. Like that's something that people aren't thinking about, rather. It's how long of it takes. And I think that's a very good point. We wanted to ask you, as far as resources go, and I love that you're saying it really depends on the individual investor's goals. What resources would you recommend for them to help, you know, figure out how to establish these goals, or how to figure out or look inward as to what their financial journey looks like?
Again, I think it just goes back to just listening to all the content that's out there. Just find podcasts that you like and listen to them. And I know that when I started listening to these podcasts, I'd pick out certain things or certain avenues that seemed interesting. You know, like I had to try a few things before I found something that I liked. You know, I tried the direct mail and cold calling and just was awful at it, just hated it, wasn't good. But I found that managing contractors and fixing up old crappy buildings I was good at that. Once I found the deal, I was good at that. So it's like, I don't know, you just have to find what fits your personality. I know that kind of dodges your question a little bit, but you know, it's different for every person.
Sure.
Yeah, no, I think that makes sense. Everybody has their strengths, and if you can get a team to play to wherever individuals kind of play into their strengths and bring that together, it's super powerful.
Yeah, and we've seen it now with Open Door Capital. I mean, a year and a half ago, it was pretty much just Brandon and myself doing all the lead generation, the acquisition stuff, all the underwriting, and now we've got a team. A total of 9 people on our team, and each one of those team members they do things way better than I ever did them. So we've got, you know, Mike on investor relations and Walker on underwriting, and like those guys just are rock stars in their individual fields. Yes, there's always some crossover and everybody's willing to help out where needed, but to plug in the right people in the right positions, I mean, it's been invaluable to us.
Oh, that's great. Ryan, this has been such a pleasure having you on. Now, we wouldn't be the tech guys who invest if we didn't ask you a tech question. And I know you're into scuba big time, right?
Okay.
So I'd love to know what your favorite piece of tech for scuba is.
I'm a pretty low tech guy when it comes to that stuff. And the reason being is like, just, it seems like the more tech, the more potential for something to break, or some obscure battery is dead, or you know, I've got my dive computer, which, you know, tells me my ascent rate and my depths and my whole dive computer, and that's probably as techy as it gets. But even the guys that have you know, you get the transmitter that broadcasts how much air you have into your dive computer, like those are super cool when they work. But I don't know how many times I've shown up to a dive site and somebody's frigging around with that thing. It's not transmitting. You know, the battery's dead. You had to go to 7 different dive shops to find the right battery. So I don't know, man. I was in the tech world for a long time. I like tech stuff, but as far as like operations, I'm just an old-fashioned guy, man. I want analog and mechanical whenever possible, tried and true bulletproof stuff. So
yeah,
I know that's not the
sense.
answer you want, but that's where I'm at.
That makes sense, especially on something that's life and death, you know, so crucial as that. What about in everyday life? Like what kind of tech or gadget do you just love or feel like you couldn't live without something?
Yeah, I don't know. Again, I'm old fashioned. I'm one of the oldest guys on the team here. So they're light years ahead of me. Like I'm just fumbling around trying to figure out how to use Google Sheets and Asana and get up to speed on this stuff. You know, I definitely, they make me, these kids these days definitely make me feel old. So I'm learning a lot, but I'm like, I feel like my parents, when I used to try to show them how to use a computer, and they'd like tell them how to
Right.
double click a mouse. Like, I'm that guy now. So uh,
Well, I wanted to ask, as far as scuba diving, what would you say is the coolest thing you've come across in your adventures as a scuba diver?
all kinds of cool stuff. I mean, Maui, even on a day that like we don't see anything out of the ordinary, even the ordinary is cool. So I mean, we see manta rays, we see dolphins.
Mm.
There's octopus out there. I was in Komodo National Park in Indonesia earlier this year. I just saw some huge manta rays. I mean, there's some really cool stuff, and even a couple weeks ago I was out, and there's a sunken World War II fighter plane that had crashed, and that's cool. We kayaked out to that thing and dropped down and saw it. So and there's
Wow.
no shortage of cool stuff to see out there.
That's awesome.
That is awesome.
Yeah.
Well, if people wanted to find out more about Open Door Capital or reach out to you and your team, how would they go about doing that?
Sure. You can check out our website. It's ODC Fund, Fund, so odcfund.com, and you can see my bio and all the team bio and the all the information on the fund. So we're just closing our second fund right now. We're going to be kicking off our third fund. I don't know exactly when, but it's coming. But you can get all the information right there on the website, or you can email me directly, Ryan, RYAN, at odcfund.com.
All right. Thanks so much for being on the show, Ryan. This was great.
Yeah, this was awesome, guys. Thanks for having me.